Greetings. Welcome to the Eternal Bright Light channel. Everyone desires financial well-being and stability in their life. But very few know about the types of financial markets that exists in the world and their method of operation. Today, we will discuss about these various types of financial market currently existing in the world. Most people may think that financial market is a single entity. But it is not exactly so. It is a network of different types of markets, each with their own specialized set of operations, contributing to the well-being of the society in many unique ways. But at the same time, in spite of being separate and distinct from each other, they are still related and interwoven with each other, together forming what we call today as financial market. Now, let's have a look at these various types of financial markets. Financial markets can be classified in two ways. First, in terms of accessibility. And second, in terms of its nature of operation. In terms of access, financial market can be classified into two types, primary market and secondary market. The primary market is the place where financial securities, like equity bonds, derivatives are issued for the first time. Whenever a company is issuing such securities for the first time, they do so in the primary market. This is done by the presence of many intermediaries, like arrangers, issuance managers, issuing bank, registrars, and book runners. They act as an intermediary between the issuer and investor, in exchange for a fee or commission. They also perform advising and underwriting activities. Therefore, it is not necessary to have an organized stock exchange in the primary market. The secondary market, also called the aftermarket, is also the market for trading securities. This can be in the form of OTC or over-the-counter market, where the transaction takes place between two parties directly, or through an organized stock exchange. After the issuance of securities through the primary market, they can be further traded in the secondary market. Hence, in the secondary market, securities are sold and transferred from one investor to another. The efficiency and price discovery in the financial market is enhanced when the secondary market is highly liquid and transparent. Here, liquidity means securities which can be easily sold at any time, with little or no loss of its value. According to the nature and type of operation, financial market can be broadly classified into 6 types. Money market, Forex market, mutual fund market, capital market, insurance market, and commodity market. Each of these markets are so vast and deep that it may take years of studying and experience to gain a significant expertise on them. Today, we will only give a brief overview about them before we proceed further. Let's start with the money market. In this type of market, mostly banks lend and borrow money, or money equivalent from each other, to match their cash shortages. They also trade in securities, treasury bills, and financial instruments like certificate of deposits, also entering into repo or reverse repo agreements. Generally, the money market instruments are of short-term nature, not more than 1 year. The money market securities are also a safe form of investments, with relatively low interest rate which is appropriate for the short time horizon. Money market can function both as over-the-counter or screen-based system. The foreign exchange markets are those where the currencies of various countries are traded. Since a foreign currency cannot be used to settle a transaction within a particular country, foreign currencies are actively traded in this market. This market is open for 24 hours during the weekdays, but remains closed on the weekends. The currencies like US dollar, Canadian dollar, Japanese yen, euro, Australian dollar, are highly liquid in the Forex market. The major Forex trading centers of the world are located in cities like New York, Tokyo, London, Hong Kong, Singapore, Paris, and Frankfurt. The Forex market is also highly volatile. Fluctuations in the currency exchange rate occurs frequently. Any change in the global economy or even national economy can greatly influence the Forex market. Mutual fund market is gaining more popularity these days. Mutual fund is the pooling of the investors' monetary contributions to create a single large fund. Then this fund is invested in shares and bonds, and the profits are shared amongst the investors, according to the share of their contributions in the fund. Thus, mutual funds companies are like intermediaries, investing on behalf of the investors. Mutual funds are managed and maintained by asset management companies or AMC. Each mutual fund has its own method of operations defined in their scheme documents, which decides matters like the minimum amount of investment, transaction charges, and maintenance charges. Mutual fund can also be bought and sold in the stock exchanges. However, in most cases, the fund itself buys and sells its own units every day, on the quoted price. Thus, mutual fund market also offers a good liquidity, and scope for investments, to the investors. Capital market is the market for buying and selling of long-term debt and equity-backed securities. This market can be broadly subdivided into two parts: equity market and debt market. Companies, governments, banks, and financial institutions raise funds for their long-term uses through this market, in the form of financial instruments, such as shares, debentures and bonds. Equity or stock markets facilitate buying and selling of shares of companies listed on the stock exchanges. Whereas, bond markets deals with issuance of debt contracts, and the buying and selling of bonds and debentures. Like the other types of markets, this market is also regulated in every nation. The capital market plays a major influential role in the global as well as national economies. Next comes the insurance market. Fundamentally, insurance contracts are used to transfer or reduce risks in uncertain events, of various forms. So, this market facilitates handling of various risks. Thus, this market plays a crucial role in providing risk management tools to both the corporate and retail level investors. Absence of such risk mitigating tools will adversely affect all the segments of the financial market. Insurance are broadly of two types: life insurance and general insurance. Life insurance is an assurance contract, whereas general insurance is an indemnity contract. Both are used to reduce or nullify risks. The insurance companies can invest the money, the customers pays them, in the form of premium for buying policies, in securities, or deposit them in banks. The insurance market is also highly regulated by the regulatory authorities, set up by the governments. Finally, the commodity market provides trading facilities for raw and primary commodities. These are traded on regulated commodity exchanges as standardized contracts. These contracts can be bought or sold, similar to the stock market, where one buys or sells shares. Stocks that belong to the commodity sectors like metal, energy, agriculture are called commodity stocks. Commodity futures contracts are a standardized agreement to buy or sell at a future date, at a price agreed today. There are various commodity exchanges currently operating in the world today. Therefore, this market also is an important part of the global financial system. There are so many more things to learn about each of these segments of the financial market. We will discuss about them separately, in details, in the coming days. Today, we only gave a brief overview, so that Someone even from non-financial educational background can easily understand it. Please share your thoughts on the comment section. More exciting and informative contents are coming, so stay tuned and subscribe to our channel. Goodbye and take care. See you soon.